Red Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
Your
Whole
boy.
clip going up. I know they can't stand it.
Okay, let's get into this conversation.
Let's do it.
I'm gonna jump right into it because I think you had heard we was talking to Don Peebles, and one of the things that he said was, and I don't want to quote the wrong number, but it's something like $60 billion, something like that, venture capital money out there floating, a crazy amount of number.
66 billion.
Less than 0.7% of 1%, like less than 70 basis points of 1% goes to Black and women, minority and women businesses combined. It's not even the number's not even big enough to just say Black businesses, so they got to put women in there combined. So
it's a fraction of a percent. You are correct.
A fraction of a percent. When, from my understanding, also, Black women, percentage-wise, started the most businesses last year in America. So
well, because that's what we do. Black women, we just do it all.
Absolutely.
And we do it better than everybody else.
That is a fact.
That's a fact. So that's a disturbing number. That's an extremely disturbing number that nobody's talking about. Because like he told us, he was like, imagine if it was even proportional to the population, where it's like, I think we're like 20% of the population. So imagine if 20% of that 66 billion went to Black businesses. Like, imagine how that would change the landscape of things overnight. Like the money's there, it's in circulation, it's just not getting to us. But nobody's talking about that. But everybody's saying like, well, Black businesses fail and different things of that nature. But I mean, there's underlying issues on why this is happening. So, okay, how do we solve this problem with venture capital?
So first, it's way more than 66 billion in venture money out there working. Way.
Is it?
I couldn't even tell you, but you know, Andreessen Horowitz alone, we've got about 30 billion under management. We're just one firm that's only been in operation for the last 10 to 12 years. And so we're just one firm. There's hundreds of firms out there, multiple that are big kind of multi-stage investment firms like ours. So 66, I would say, is a low number. Maybe I
think that was like every year, maybe 66.
Okay, annually.
Gotcha.
Okay.
Yeah.
But at work, there's a lot of dollars at work over time. But you're asking a big question that I think is really hard to solve. But one of the things that I've seen over the last few years is people just got to put the money out there because, you know, historically, people have a way that they look at companies. It's like you have to have, you know, we want the founders to have a certain degree. We want the founders to have a certain amount of experience, have worked at a certain set of companies, right? If you've worked at, you know, I'm an ex-Twitter, ex-Facebook, you know, Yelp engineer, whatever the case may be. And the fact is that you don't need all those things to be a good founder. And so I think when we can open up the scope to who can be a good founder, we will likely get more dollars in the hands of Black folks and Black women specifically. At the same time, I think the other thing is really important is putting Black investors in place so they can distribute the capital, right? Because people, a lot of times, like for kind of the industries that people like, you usually can only like understand problems that like, you know, or that you've seen. And so when we ask white investors to understand Black companies or Black businesses, if they're in a particular space, they don't get it, right? So then they get into the investment committee meeting and they got to do a vote. And they're like, well, I don't understand. I don't get it. And so if we have Black investors that have dollars that they can put into companies, that also I think will increase the amount of dollars that go into Black founders. At the same time, it's not like Black founders only found Black companies. We found, you know, social media companies or consumer, you know, e-commerce companies too. But we do need to have more folks in the room who understand our community to make the decision. So I would say probably those two things.
So VC is something that, you know, is not spoken about in our communities. And so I'm interested in what led you to the path of VC.
For sure. So I just learned about VC in 2016. Wow. So I'm about 6 years in. I was on a completely different path in life. I went to Clark Atlanta undergrad. Shout out to CAU.
Shout out to the Panthers.
Okay.
Shout out to the Panthers. Yeah. And I was getting a sociology degree. I was like, ooh, I love learning about people and groups. And I had this idea that I wanted to be an academic. I wanted to do research full time and teach full time, be dean of a school and the president of a college. And I went through this path, got my first master's, went to a PhD, hated it, dropped out. I was like, I got to get out of here. This is not for me. Moved to California. And, you know, they say to be successful in Silicon Valley, you got to have a good dropout story. So I got my dropout story. Yeah. Moved to Silicon Valley, and it wasn't until I went to business school. So I went to business school at Stanford, and I didn't live on campus because by the time I went to business school, I was much older than, you know, most of the people there. And I was like, I'm gonna stay at my house. I'm not gonna move on campus and all that stuff. And so I was trying to beat traffic. Okay, when I was picking my classes, I didn't want to be driving at 9 o'clock in the morning on the 101. It is very hectic. And so there was a venture class that was like early afternoon. I said, perfect, sign me up. And didn't know what it was. And so I get in there, and it was actually with Eric Schmidt. So Eric Schmidt is the former CEO of Google, former CEO, chairman. Everybody calls him, you know, the first adult in the room at Google. And I knew, got completely distracted by finance. That's the bottom line. Went into that class, read everything, just started doing extra stuff, extra reading. And one day we went for a walk with Eric after class, and he may or may not remember this, but we did a little short walk around the GSB. And he's like, you know, Megan, you're one of my best students. I think you should try venture for real. And I said, Black people don't do that. I said, now, why would you try to set me up for failure, knowing that there are not people who look like me in this industry? And so I kind of just brushed it off. But after a while, I said, you know what, Megan, if Eric Schmidt says you should try something, maybe you should try it. So then the rest is kind of history. I spent my time running up and down Sand Hill Road. The rest of my time at business school, started doing internships. You're supposed to do like one internship between year 1 and year 2 in business school. And I think I did a total of like 4 all throughout the year. I was working during school, turned into a full-time role, and I've been doing it ever since.
Cool question for you. For those who are interested in getting into the VC space, what are some of the most innovative ways you've seen people that look like us break into the industry?
Yep. So I would say there's 2 ways. And honestly, the most innovative and I think most successful thing I've seen people do is start their own. In the last 2 or 3 years, we've seen more Black founded venture funds and firms than I've ever seen. It's been an explosion, and I love it. If you're looking for the more traditional path, there's a couple of ways you can do it. So working at a startup, people love seeing that you've spent time on a product team, that you spent time in engineering or spent time in marketing, because you have insight into what to look for in a founder, right? You understand like, oh, they need to set up this, you know, piece of the company or this vertical. You have insight into kind of what the needs are in the space. Also going to business school and kind of just getting an extra business edge and how to think about, you know, technology and to think about business and to think about startups is important. But I say one of the easiest ways is going to a startup and actually spending some time in it, because you get kind of an extra edge. And then actually probably the most important thing is having a perspective about the future. So VC is a long game. It is very different from the public market. It is not like, oh, I'll buy some stocks and next year I'm gonna cash out, or in 2 years I'm gonna cash out, or in 5 years I'm gonna cash. Because I tell my investors in CLF, you know, venture is an 8 to 10 year game. Like, it is a long view game. I say, if you're gonna come to me in 2 years and ask me where your money is, I don't have it.
Yeah,
I don't have it. And so investors who have a perspective on what they think is gonna happen in the future, like, oh, I think, you know, people are going to want to start communicating through, I don't know, bird calls by 2030, right? And so you start looking for companies in that space. They just really want people who are kind of thinking beyond the wave. So if you can kind of formulate an idea around that, I think you're likely setting yourself up for success.